Good morning, traders. I'm Michael Sabo, Senior Market Strategist here with RJO Futures in Chicago, bringing you some commentary here on the energy markets. So let's get started. Well, currently we've got November oil. We're trading slightly firmer. We're up about 16 cents, trading around 91.72. Brent's quite a bit weaker, trading just under $96 a barrel. And take a look at that WTI Brent spread. We've really seen that narrow down to around about $4.30 here. So really seeing that narrowing. And I think there's going to be some great opportunities there. If you want to give me a call or shoot me an email, we'll get into a little bit more detail on how you can trade that spread. Taking a look at nat gas, that's kind of quiet. It's sitting about unchanged, up just slightly. The complex is a bit weaker. Heat's off about a little over 2 cents, and we're seeing the unleaded gas, or the RBOB, that's off here a little over 2.25. So we certainly got a weaker tone there. Now, taking a look at really the main drivers here in the energy markets this morning is the EIA data that came out here just a little while ago. Most traders were expecting to see a possible build of about 1 million barrels, and it actually came in with a draw of 4.3 million barrels. So I think that's what's adding to a little bit of the supportive tone here. Most that's contributed to, we're seeing a dip in the imports here for oil. And that, coupled with, if you take a look at the refinery capacity utilization rate, basically our refineries are running at about 93.4%, which is certainly, I would say, is on the stronger side here for this time of year. So a dip in imports coupled with that strong refinery demand is what really is helping contribute here to the drawdown that we saw here this week. Now, looking at the bearish data that's out there right now, though, we saw some weak economic data coming out of Germany. We've got airstrikes going on in parts of Syria and Iraq, and we've really seen a real lack of upside action there. So that's not really helping out much. And I think you got a lot of that is, if you look at, we've seen an increase in oil production actually coming out of Iraq, coming out of Nigeria. So that's helping here kind of flood the market a little bit. And right now, when you look across parts of Europe here, we're seeing a lot of refineries that are under maintenance for this time of year. So that's kind of contributing to seeing a lack of demand there for oil. On the technical side of things, I do think oil is building a little bit of base here just above this $90 a barrel area. Short-term technical indicators still appear, in my opinion, to be in the oversold territory. We've seen a little bit of strength in oil, but not too much. So we really got some strong bull and bear forces here at work. Ultimately, what I'm thinking is going to happen here right now, though, is I think oil prices are going to base in this area. We're going to start to build a strong base. We could see some upticks here in the price of oil, possibly moving up into around that mid-90 range. And then as we start to move towards the tail end of this year, it's possible for prices here to dip down below $90 a barrel. So if you want to talk and get some ideas on how you can position yourself, please give me a call or shoot me an email. We can get into more detail. Futures and options on futures may involve substantial risk and may not be suitable for all investors.